Hey, good morning, everybody. Welcome to PreMarket Prep. I'm Spencer Israel. I got Joel. I got Dennis. And we got you. That's the best part. You're the best part of the show. Without you, we would be, I don't know, talking amongst ourselves. Welcome to, on this, the final day of the first quarter. We're going to do a bit of a look back, look at the winners and losers of Q1, what worked, what didn't work. Any hints that can potentially provide going forward here. As far as individual movers, we got to talk about Apple not closing green for the first time in how long. We got to talk about a couple earnings this morning. Path, Walgreens, both reporting. Baidu moving. We'll talk about that. We will take questions from our chat, of course. Of course, we'll do that. Do some ticker time. Marc Chaikin and Peter Tuchman are today's guests. So let's roll the intro and smash the like. Here we go. Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Let us bring on Mr. Joel. Joel, good morning.
Good morning, Spencer, on this windy Thursday here in the Motor City, man. Did you hear that wind howling last night? Or
I drove through the wind, Joel. It was a lot like this.
I know, holy mackerel. But a windy city, but a choppy market overnight. If this is any indication for the last day of the quarter, there could be a lot of choppy trading, and I don't like that. We're up two handles, 45.98. We had a strong close, had follow through, but then we pulled back, and we're just hanging unchanged. So I think I'll just call today the battle for 4,600. We closed at 45.96, but I like that nice round number. Crude in the red by 617. U.S. releasing a ton of reserves,
Well,
so
maybe,
that's
maybe,
down.
maybe.
Down, maybe. Okay, well, the futures think so. Gold down 340 at 1935.60. Silver in the red by 6 cents, 25.04. And Bitcoin up $125 at 47,365. And Ethereum, it's up $14.50 at 34.22. And I turn on my screen or I look at my quotes in the middle of the night, and I'm like, Dennis is not going to be any good. Dennis did not get a lot of trading action last night.
Slow. Painfully slow. This week and last week too, this VIX implosion is just killing my P&L. We like the VIX up when we're trading. Maybe not so much for the long-term portfolio, but man, I like the trading. I don't know what to say. It's quieted down. We're ignoring a lot of the stuff coming. There's been no major difference in the Ukraine situation. So that's a little bit to lead to the VIX implosion, I think. Obviously, if we see some serious escalation, you'll probably see the market roll over, or serious de-escalation, you'll probably see the market rally. But it's been quiet. And now, look, you even got a little bit of decoupling happening here this morning, Joe. We've had a perfectly inverse correlation. When oil's getting hammered, which it absolutely is this morning, the market is usually rallying. But today, the market is flat and oil's getting hammered. So pulling the wool over our eyes on this one. Why the sell-off in oil? Do we have a headline there? Supply?
We do have a headline.
Reuters,
Reuters citing four, not one, not two, but not three, but four anonymous sources saying that the Biden administration is considering releasing up to 180 million barrels of oil over the next few months from the Strategic Petroleum Reserve. If so, it would be the largest SPR release since the reserves were created in the 70s.
And there you go. Oil getting hit here. Pretty decent hit.
Yeah.
I mean, we couldn't make a new high on the last move. We snapped back yesterday, big snapback, and now we're back down. So we're just chopping around here in oil land. I mean, obviously Ukraine's going to be a driver here, but Joel, you can always do the technicals. What are you saying on the technicals and crude?
Oh man, this is such a wild child. I mean, you got back half of that move what I was looking for, but it went by it by like a long ways. Half back from that 130 to 92 was 111. You blew through that. I'll say for now. I mean, I got the 50% up there. Let's just call it 102. I'll still stick with 102 here, or not 102. I'm sorry. I was looking at the 15-minute chart. Three daily highs in the same area. Let's call it 108. And that's a long ways away. The high 2 days ago, 0784, 0875 today, and then 0780. Let's see if we had a close in that area. Yeah, close at 10782. That was yesterday's close. So I mean, you can get your face ripped off. Trading 108 is 3-star resistance, but that's what I'm looking at now. On the downside, 98.44 is big. That was your low. What's today? Thursday. That was your low on Tuesday. So it's a wicked market, man. I mean, the way
It
the thing
is.
whips around. But that's what I'm looking at.
It's a
108 to
whipsaw
98.
choppy market. That's going to continue. I don't see the chop going away. Multiple people reaching out. They've had some pretty good gainers, and they're talking about, should I take the profits? And I was like, I take the profits in this market when I got it. I'm not sitting around looking for the 100% gainers. You get 5, 6, 10% in something, taking it, you're moving on, because we're still going to be choppy, and it has been a pretty good run. With that being said, I mean, there's some stocks that are starting to look a lot healthier. We talked about the high growth names, the high tech or high growth tech names here. Can't talk this early in the morning, but the Cathie Wood names. Cathie's getting hit a little bit here this morning. We got one bad one. We might as well go to it, Spencer. I know I'm getting away from the, but I don't see it on the. I don't actually see.
Well,
what
I threw it on the under the movers.
Oh, okay.
but-
There's
Oh,
one there.
yeah. The old movers
Well, we're
check.
throwing it to the UiPath right now because we started talking about it, and it is your
All right.
disaster stock of the day. It is one of the favorites of Cathie, so don't be surprised if a lot of those ARK funds are trading in the red here this morning, because a lot of them hold PATH down 18.5% here this morning. What did they do on earnings?
Yeah, just for reference on the ARC thing, UiPath is the 8th largest weighting across the ARC family of funds. It accounts for about 3 2/3%
Really?
of ARC assets. Anyway, Path, the numbers from last night, EPS from last quarter beat, sales beat, but the guidance is what we're looking at here. Guidance was pretty light. Let me give you some more numbers on that. Revenue guidance below estimates, $224 million versus a $246 million estimate. They guided also for a wider EPS loss. What else did they say? The fiscal year guidance was also below estimates as well. So basically, their earnings were fine, but it was the forward-looking numbers, the guidance that came in light, and that is why we are down. You're seeing how many price target lowerings today? 1, 2, 3, 4. At least a half dozen.
The good news is there is some support. The bad news is you kind of threw it, because this is a new all-time low. So I would say if it can get up and hold the 23.93 old all-time low, then you have the potential for a bounce. And we have traded through it pretty much for a lot of the session. That's your level. I mean, when stocks are making new all-time lows, you got to go. I don't think it applies to the pre-market, though. So let's see what happens. Can they get this thing up to the 23.93, or can it hold that whole 23.5 to 24 area? If it can, then you get the potential for a double bottom. But again, buying stocks on bad earnings reports nearing or making new all-time lows has never been a recipe in my book for success.
I've noticed that I've been like drawing more trend lines as of late, and this is when I'll think of buying this thing. Look at that, coming off the 90, got the steepest trend line in the world. Now you're even farther away from it. So that's when I'll think about when that's one heck of a. I don't know. I know 24. Yeah, you mentioned a good level, but I'm gonna keep that one up there and see it. That's so steep, man. That's like a double black diamond hill right there that I would ski
Wow, it's
down.
your chart too is just kind of weird.
Why?
because you don't have that much data, so you're trying to show out a whole pile of data that isn't there. So I mean, it's still you got
A
to
whole
stretch
pile of
that
data's
chart
not
out.
there. I connected 3 highs.
Stretch that chart out though, and it doesn't look like that at all.
It doesn't look as steep if you make the chart take
It's
up
a 45 if you make the chart fill the screen.
Yeah.
So, which is still not a good trend. Trend
Exactly.
absolutely not your friend on this thing. New all-time lows, not your friend on this thing. Lots of reasons to not be friendly with UiPath here today. Kathy probably buys some. We know how she rolls. She'll probably back up the truck and buy a little bit if she's got some dry powder.
Is that better, Dennis, on the weekly?
Yeah. That looks a
Yeah.
little nicer.
Yeah.
Doesn't look
So that
crazy.
only needs to get above 29.
I'm going to say just needs to hold that low. And it takes the low out in
Yeah.
the regular session. And then when the stocks, I already said stocks are making new all-time lows.
Gotta go.
Time to go.
Time to go.
Well, since we're already on the earnings thing, we might as well go to Walgreens just for a hot second here. Stock is down, was up, now is down. Reported about an hour or so ago now. Earnings per share above estimates, sales above estimates, guidance reaffirmed for the year. No change.
Part of me wonders if there was, and I obviously it's drugstores, but I mean, you know, we are all going to the drugstore to get our COVID shot for the last year, and there's going to be a little bit less of doing that. I mean, we go to the drugstores anyway, so does the extra visit for your COVID shot really make a difference? But I don't know. But CVS has been the better performer of these stocks for a long time. You know, I pair trade these things up together, but I'll tell you, WBA has been the laggard of the group for, man, I feel like forever. Like CVS has been breaking out back in October and making new highs. And then Walgreens just cannot seem to get it going. I mean, I don't know what the difference between these two stores is. Like going to a Walgreens, like going to a CVS, they seem virtually identical to me. But for whatever reason, CVS gets the love and WBA always seems to get left behind.
Yeah.
Well, we're just off the pre-market low. You're currently trading 46.40, so not a lot of great data here. Pre-market low 46.17, and you have a couple. If you want to take a shot here, you have a low here just above 46, 46.05. A couple other lows at this area. Low of the move is 44. Let's call this is easy. You're below the 50%, so got to went from 44 to 49, right? 5.2 and a half. Oh, 50% right there is at 46 and a half. So if it can hold 46 to 46 and a half, maybe it will bounce. But I can tell you what's wrong. There's 2 things wrong with Walgreens Boots Alliance.
What?
First of all, you don't buy Boots Alliance. Change your symbol from WAG to WBA and then get rid of Boots Alliance. Okay?
Did they lose Boots Alliance now?
Didn't they, Spencer?
Yeah, I knew that.
Well, they should go back to WAG.
Yeah.
I used to always call it WAG the dog because WAG the tail.
Yeah, and there's not a WAG.
So no WAG. I liked WAG.
Yeah, that was so easy. The second thing is,
who has WAG now? Is it out there?
Nobody. I just pulled it up.
Get your WAG back on, WBA. Wake up.
Yeah. And the second thing is do you go to Walgreens, Spencer? Do you have one by you? Do you go to the one at 12 and 12 in Northwestern or not?
I'm a CVS guy.
You're a CVS guy?
Yeah.
Their problem now, I don't know if they do it on purpose or they just is employee retention. It's a revolving door at the one that I go to at 14 in Middle Belt. So I don't know if they just rotate people out of stores and go to other stores, but it's
it's tough in retail.
But it's just
a lot.
But it's like even before COVID, it's like you see the person, you buy the pack of gum, you like to say hi. If he's wearing a Michigan thing, you talk about Michigan sports. Just like I don't think they can keep employees, and if you don't have,
it's hard in retail though. I know. Okay. Even going back when my Quiznos days, and those who just joined the show when I owned the Quiznos, and they told you off the hop that a good employee lasts anything over 9 months because you're in retail and these are starter jobs. Not that Walgreens is necessarily a starter job, but there's some of them in there. They're not super high paying jobs unless you're the pharmacist. So it is a tougher environment for employee retention just because they come and they find some better work. But I mean,
Jaeger in the chat says they haven't actually sold Boots Alliance yet. It's under review, which could be true. But
okay. So maybe they'll eventually go
but
back
they
to
intend
WAG.
to sell Boots Alliance is the point. And yeah, it's a retail job, like Dennis. It's hard.
It's hard to retain employees. Like I said, the pharmacists all get paid pretty good money. I think you work in the pharmacy, you get a little bit more, but the regular cashier jobs are lower paying jobs, and retention's hard.
Okay. Dennis, real quick question here. Have you noticed the Robinhood guys? Are they out there yet? Have they been able to? Did they actually start that extended hour trade?
It's a little bit misleading of a headline because Robinhood already had some extended hours. They just extended their extended hours.
Yes.
Correct.
Yes.
So it's not like they weren't allowed to trade pre-market after hours. They just extended the hours that they were allowed to trade.
On that.
Yes.
So, and the other thing to consider is you're not going to see those guys on the exchanges because Citadel and obviously the other off-exchange market makers intercept all the orders.
Yep.
So they don't interact with people like me because they're interacting directly with the off-exchange market makers, which I've argued for a long time. Bring those orders into the market, and then other professionals will fight for that flow. But that's a whole nother conversation. We know Dave Lauer, who we've known for a long time, has been fighting the good fight here for a long time to get more transparency, bring those orders into the public markets, and they'll probably get better pricing in the way of tighter spreads. But I mean, that's fallen on deaf ears for a long time.
What's your Virtue stock? What's the symbol on that?
On which stock?
Virtue.
VIRT.
VIRT.
Okay, I just.
It's been a good one. It's been a good one. It's at all-time highs. They like the trading environment.
Finally, that one never seems to really move. But
remember, I bought it back at 29, and then it went to 34, and I felt like a heartbeat. Yeah, because it went up 20% a month, and I'm like, this thing never moves. And then it's consolidated forever, and now it's moving again. I'm not in it. We wait for the pullback, but Virtue Financial is your high-frequency trader that's benefiting from these relationships. It's Virtue and Citadel are the two guns. Citadel is obviously not publicly traded, but Virtue is. So if you want to participate, that is the stock. They do very well in high volatile environments. So I would not be surprised. I'm not surprised that's doing well with the VIX trading higher. And I'm also not surprised if they blow it away last quarter because volatility is good for them.
All right, let's bring on Marc Chaikin and get his thoughts. We haven't really talked about like Q1 as a whole yet. I'm curious to get his thoughts on that. So let's bring him on right now. Marc Chaikin, good morning.
Good morning.
How are we doing today?
Doing well. Do we have an echo here?
Yeah, you do. Maybe in the background, Marc? Is there another mic open? Two mics?
Turn your radio down, Marc. Turn your radio dial down.
I think it's gone. Is it gone?
I never heard an echo, so maybe
I think it's gone. I did too, Marc. I'm with you.
Yeah.
That's weird.
I think he's good. I think he's good.
All right. I think he's good too. Marc, at a high level here, give us your summary take on the first quarter.
I think it's going to be mixed. We saw the first hint of that yesterday when some of the retailers reported, like Chewy and RH Corp, the old Restoration Hardware, tough quarters and really very negative reactions, down between 12 and 14% in both of them. On the other hand, Lululemon had a bang-up quarter. So I think it's going to be mixed, with obviously energy looking really strong. And in theory, the financials, but that run may have taken place already. But I think the key to the market here is, I don't think the Fed is what people are going to be watching here. And the war is the war. It's going to end when and however it ends. But clearly, you saw in the last week or so that the market can overcome those walls of worry. So it's going to be first quarter earnings that are really going to affect whether we get significantly through this 4,600 level up to new highs, or whether we flop back into the 4,350, 4,400 range.
But as far as just the performance of the market here, I mean, obviously energy is dominated, commodities have dominated, banks have done okay, utilities have done okay, everything else kind of struggled throughout the quarter. What is your take on just on the market through the first 3 months of the year?
Again, I think it's a mixed bag because you've got the Cathie Woods type stocks that are still vulnerable. They've rallied on some short covering here in the last few days, particularly as you got above that 45.50, 45.95 resistance area. And it'll be interesting to see if the market takes a stand. But I think it's going to be a stock pickers market, or more particularly, it's going to be an industry group focused market. So energy, mining, very, very strong. I think that's where the action's going to be. And we're getting a dip here in the energy stocks that we like. I think chemicals are on the table, and food stocks. So I think this is a point where you don't want to talk about the market, because if you were talking about the market, you were waiting for a crash, below 4,000, and that didn't happen because you've had a rolling crash in so many industry groups. So I think it's a time to focus on macro trends, and rather than try and be an economist, just let the industry groups tell you where the money's coming.
Mark, I had someone tweet at me last week. He said, "Hey, next time you get Mark on, can you please ask him about his last segment? He signaled that he was going to be watching March 21st as an important day, ended up being a pretty quiet day. I don't know if you have any thoughts on that, or if you if you could refresh as to why you were watching that day specifically."
Well, historically, the equinox around the time when spring arrives is a turning point for the market. And instead of turning down, you just got a continuation move off the very, very oversold bottom. So, it's a date I always watch because very often you get market turning points. In this case, the oversold conditions, VIX above 30 for 7 days in a row, all the setups were there, and you've got this quarter end buying coming in, which in theory is over today with the rebalancing and so forth. So I think from my point of view, I'm now by the dips. I don't think we're going to make a lower low in this particular cycle. Maybe we make a lower low in October after rallying to new highs, but I'm definitely buying the dips in energy and trying to stay out of the market debate, because I really do think it's a market of stocks, but more particularly a market of industry groups.
Give us a couple names in the energy sector that you prefer.
I like Diamondback, FANG. I like Ovintiv, OVV. A smaller name, Cosmos Energy, KOS. And my favorite stock is EQT.
EQT, yeah. You mentioned
That's been going, man.
Yeah.
That one doesn't even pull back.
No, it will.
It is this morning.
It's pulling back a bit. It's the largest. Here's an interesting thing. I recommended this in my monthly letter on Thursday. EQT, if it were a country, would be the 12th largest natural gas producer in the world. If it were a country. And most of those reserves are in Pennsylvania. The pipelines are in place. There's not a lot of environmental issues. So they're going to be a big beneficiary of the deal we made with Europe to ship LNG over there. And I think it's the purest play in the LNG market. And, for people who are waiting to green energy to bail us out vis-a-vis climate, think about this. Coal burning utility plants create twice as much pollution as LNG burning utility plants. So, once we overcome the green menace in this country, which, I lean to the liberal side. So this is not a political statement. We just have to balance, in my view, our desire to clean up the planet and our desire to not be dependent on rogue states like Russia and Saudi Arabia for energy. So that, to me, speaks to LNG as a big macro tailwind for the next 3 to 5 years.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins the show every other Thursday, shares insights on the market. I want to ask you, and I guess does this fit into the energy play, utilities? I mean, if you're talking about higher interest rates, right? How long has there been an inverse correlation between utilities and interest rates? So are now I look at Duke, I look at XLU, these boring old utilities are just busting out. And here you have higher inflation and higher interest rates. Are you looking at these are just energy plays now, or just a flight to safety, quality? Tell us about the utilities.
I'm not sure I know the answer to that one. I shake my head a little bit when I see the
Okay.
utilities going up like this, but I'd rather play the energy side of that equation. Clearly, they've got some pricing power, X what the state regulatory commissions, cap them. So they do have the ability to raise rates, and they're doing it. I know they're doing it here in Connecticut. So, electricity is something we all need. And, I don't know where the tension is between the consumer and higher interest rates and inflation and so forth. But they're interesting yield plays in a market where the bond market is so under pressure with rates going up that maybe it's the yield play combined with pricing power.
Marc, is looking ahead here, outside of the energy universe, which has dominated the quarter, like we said. Any other industries on your radar? I mean, I guess you kind of mentioned food stocks, staples a little bit there, but any other potential plays on your radar here?
Yeah, MP, which I think we've mentioned before,
Yes,
Yeah.
the rare earth play, it made a new all-time high yesterday.
Wow.
Clearly, people are focusing on what China and Russia could do to disrupt our technology space, because rare earths, as you know, are used in cell phones and a lot of electronic equipment. And the ores are there. We just haven't had the capability of refining them. We've been shipping the ore to China to refine it. And so MP is trying that. I think people are willing to give them a wide berth to see if this gets off the ground. It is speculative. But, and outside of that, the chemicals and a lot of the chemical stocks like FMC and Corteva are really food plays. And so FMC has been a favorite of mine. Corteva, which was spun out of DuPont, is a seed. I think it's genetically engineered seeds. And they're all acting really well here. And so you got to buy the pullbacks. Can't chase these. And we'll get the pullbacks. Any hint of a cessation in hostilities in the Ukraine, and they pull back a bit. But you can see from the charts that they're not quitting on a daily chart. And so this, we'll get that buying opportunity, whether it's through some progress in the peace negotiations or just through exhaustion. But these are the stocks I would be focusing on: energy, mining, food/chemicals. I actually like the chemical part of it. FMC, is critical to a farmer's ability to fight off pests and pestilence. So I think that's a nice chunky group of stocks.
One more for you, Marc, before we let you go. I mean, we're just like back into this Goldilocks market. I mean, a lot of the market was rallying while the war was going on. We got big news of de-escalation, right? That was the impetus for the rally on Monday. We can clearly see that's not happening. Is this just the way it's going to be? That we're just back to just ignoring bad news and just a relentless bull market?
Well, it's hard to call this a bull market until we, break out above 48.
Well, everyone was calling it a bear market a week and a half ago.
Well, fair
I can
enough.
call it the bull market.
Fair enough. But I think, again, goes back to dealer flows. So when you had the options expiration 2 weeks ago, a lot of gamma came off. And I always leave this to Dennis to explain. So the gamma, the dealer gamma, shorting, when people were buying puts in droves, dealers were selling them. So they were, in essence, short the market. And that created all those wild swings, in addition to the news about the Fed and the war. But it really looked to me and to people smarter than me that it was the dealer flows. Over $1 trillion or $2 trillion of gamma came off on the expiration on the 18th. And since then, if you look at the market, it has been straight up. And so a lot of this, incremental straight up market has to do with dealer flows. Dennis, any thoughts on that?
I mean, it's we always talk about the moves after a major expiration, and it like releases the market. So a lot of times, what you see is, when you got the options out there, you've got tighter markets because you have option positions. But once those go off the board, then it can release. So then what happens is you get a little bit of demand. It can really push price. The opposite can work too. You get a little bit of supply, can really push price too. But we always talk about, after a major option expiration, which we just have, that all of a sudden the stocks have a little bit less liquidity and they're kind of released to a certain extent. That's why you often, even on individual names, if you got huge open interest in some certain stocks near the strikes, you see the big move on the Monday and they're like, well, why? They're screwing me. Well, it's just the natural reaction because you don't have the dealers making those markets tighter because they don't have the offsetting option positions. It's all of a sudden all that liquidity is gone. So that's what I see more or less, is usually you see the volatility or the movement pick up after a major option expiration.
Yeah, I think we saw that in Tesla right after the option expiration, and that's probably the biggest option name in the. And by the way, that's one of the reasons they want to split the stock, to get more retail participation in the options market, not the because you can buy fractional shares, but you can't buy fractional options.
You know what though? I wonder how many people actually buy fractional shares. Maybe people do. I don't know. I know it's available now, but still,
it's getting I mean, you can't
relatively
buy one share of Tesla for $1,000. They want to buy 0.1 shares for $100. I get it. I guess if you got like a $500 account, you want to diversify and you want Tesla and Amazon in there, well, fractional shares, I guess, do make sense.
Yeah, the kids who are trading at Robinhood don't think the way we did about the market. They don't think in terms of round lots.
Yeah.
But the option market forces you to be a round lot buyer. And so an option on a Tesla that's trading at 900, a call option is going to be a big commitment.
There used to be rules for the professionals that, I go back like 10 years ago, I couldn't, I could get executed and end up with an odd lot and trade out of it, but I couldn't initiate a position with an odd lot. There was rules actually for that because it just, obviously they didn't want everybody who's trading odd lots, and it was always 100 shares. I mean, so, you wanted to buy Amazon, you could buy 100 shares. It used to be rules like that, around professionals. And I think most of that has been released now too, but.
Yeah, I'd like to leave folks with my real overriding sort of pattern for the year. There is going to be a major bottom in 2022. It's the midterm election year, 24 out of 27 times since, I think, 1914. You've made a major bottom and you've rallied 30 to 50%. So I've been looking for that buying opportunity. We're out in print on that pattern. And did we see it at the 4,100 level? Maybe. Certainly we're going to give it a shot to 4,800 here in the short term, unless they just fall back right now, and they're not falling back today yet. But you've got to break the pattern of, as I said earlier, thinking about the market as a monolith and look for that buying opportunity. It's going to be the last good buying opportunity, heading into the elections in 2024. So I think you
all right.
If you want to make money, just find that buying opportunity, whether it's in individual stocks, groups, or quote unquote the market.
Marc Chaikin, market veteran, founder of Chaikin Analytics, creator of the Chaikin Power Gauge, Chaikin Money Flow, Chaikin Oscillator. Marc, have a good one. Talk to you again in a couple weeks.
Yes, sir. I think is Easter coming up in 2 weeks?
Well, Good Friday. Good Friday is the 15th, but we'll be here on the 14th.
Yeah, the options expire on the 14th.
Yes, that's a good point. Options expiration is the second Thursday of April this year. Because,
yes. Look at that. Because Friday, Good Friday.
Because Good Fridays.
Yeah, thanks for letting me know that. I've been like coming in Friday ready to trade. I'd be like,
I was going to remind you all. I was going to remind you all that day, but I
jumped the gun.
It's not very often you see an option expiration on a Thursday.
That's the only one I've ever seen.
Yeah.
All right.
Fun.
All right, guys, enjoy.
All right. And I think apparently people in the chat will use fractional shares. I think it's awesome. Everyone offers it for a reason, right?
Sure.
Most of them
it makes perfect sense on a stock like Tesla. You think, I want to start my account, Robinhood account with $500. I can't even buy a share of Tesla.
It
So
makes
now
total
all of a
sense.
sudden 0.1 shares is like, oh, now I can diversify. So it does make sense.
Makes total sense. Real
Yeah.
fast, I did
Is
want.
there which brokerages offer fractional shares?
Most of them do.
Most of them do now.
Most of them do. I know. I mean, I'm on Fidelity. I know Fidelity does. The new ones all do. Webull, Robinhood,
Yeah.
Public. Someone in the
Cool.
chat said that TD didn't. I find that very hard to believe. I'm sure. I'm sure most of them do by now. They're saying eToro does. Yeah, I'm sure. I think. I think at this point, almost all of them do. IB, not think or swim. All right, that's interesting. I just wanted to quickly just do a quick rundown of the quarter, and what's worked and what hasn't. And just in looking at the top performing ETFs of the quarter, I have to scroll a while to find anything that's not energy related, energy or coal, right? So what has worked is basically every single energy ETF and
Yeah.
every single coal related ETF, and a lot of that stuff is like South America too. So you're seeing like the Latin America ETFs, the Brazil ETFs, right? Those have all worked because those all have a lot of energy and coal exposure.
Yeah.
What has not worked? We talked about this with Marc, right? Growth tech has not worked. Biotech has not worked. Obviously, Russia. We know that hasn't worked. That's its own thing. Home construction has not worked. ITB is your iShares Home Construction ETF, one of your biggest losers of the year, down 25%. I mentioned biotech already, which has not worked. IBB. The ARC funds, which we know. iBuy is interesting. The online retail ETF, IBUY, is down 23% this year. That has not worked either. A lot of these newer ones, the IPO ETF, not worked. Basically, anything that's growth related hasn't worked.
Until the last 2 weeks. So the numbers you're seeing at the end of this quarter are going to look a hell of a lot better than they would have 2.5 weeks ago.
Yeah.
Like people, probably, their quarterly end of year reports, they're probably like, oh, I heard the market did really bad. They get these quarterly reports like, this isn't that bad. Because a lot of these big names have come storming back in the last 2 weeks. I mean, the Apple, just going back to Apple again, I still look at that chart, and Joel, good call yesterday, called the first down day. The red candle. He was correct. I mean, we are at major super duper resistance. If I had Apple in a trading account, I had to be selling it. But again, it's my long-term investing account. I don't want to realize any more gains.
Pretty remarkable.
You got a good level though. If you're looking for more downside in Apple today, let's call it 76.50 because that splits the lows from the last 2 days. The next daily low comes in at 172. So you Apple traders, you're still a buck $1.60 away from it, $1.66. So I'm not gonna go out on a limb and call back-to-back down days in Apple, even though we just got a little bit of a tail off here. We had the personal income numbers come out, and we popped over there, 4,600. But now I don't even know. I don't even want to say it. We're leaking because it's only 5 points, but that little pop off the personal income numbers was sold. We got jobs data tomorrow. I mean, maybe just see some position squaring ahead of that, but I don't think the jobs data is going to affect what the Fed's going to do too much.
Yeah, personal spending in the U.S. for February came in up 0.2% versus a 2.1% reading in January. So big month over month decline. I don't know if that's normal or not, the January to February decline there, but that seems like a big change month over month in personal spending.
It's a big drop.
It's a big drop, but it could be normal. It could be a seasonal thing. I don't know. I'm not super familiar with that data, but that's interesting. And just just tying a bow on the end of the quarter stuff, I didn't realize this until just now. Netflix is one of your worst performers in the S&P this year. It's actually your fourth worst performer.
Was that earnings
in the S&P 500? Yeah, it was that earnings report.
I'm long it. I bought it at 370 along with Bill Ackman. Apparently, it ran up to 458, and I felt like a hero. And then I gave it all back, and I felt like a zero. So that's long-term investing for you.
You always do this.
Well, you get up 20% in something in 4 days, and you're like, well, it's a long-term investment. I talked myself out of selling when all my spiny senses said, ring the register, Dennis, ring the register. And I was like, no, it's a long-term investment. I got to hold on to it. And
You should make some rules.
When they get up 20% in 4 days, you sell no matter what. That should be a rule. Take the money and run. Woo, woo, woo.
The way you slander long-term investing, it really grinds my gears.
It sucks, to be honest with you. Like, I hate looking at my portfolio go like this all the time. My trading account is fairly consistently higher.
Slander.
My long-term investment portfolio goes. I guess if you don't look at it and it's trending up in these waves over the course of time, it works. But as a short-term trader, you're like, holy man, I was just up. Think about like you're a long-term investor in Square, and you bought this thing at $75, and it went to where did it go? Where did Square go up to? $289, and you're sitting up there, and you're up huge, and then all of a sudden, boom, it comes all the way back down, and you're not up at all. And now it's up a little bit, and you're like, okay, I'm feeling a little bit better about it, but man, I wish I would have rang the register at 289. Well, that's long-term investing.
Dennis, if this trading thing doesn't work out for you, Tracy says you should sing jingles for a living.
Oh yeah, I'm an awesome singer. I would have been an American Idol if I was American.
I wondered when you were going to bring that Square up again.
I'm out of it, and I'm mad about that. I'm out of it now.
I know you get that saying
mad all the time.
You just
can't win with him.
So angry.
Can't win. Anyway, so yeah, I like doing these like end of the quarter just looks and seeing what worked and what didn't. Netflix jumped out to me. PayPal, which was down yesterday on some Apple news, is also a big loser for the quarter. One of your worst performers in the S&P index.
You know what? I mean, it was on a decline, but then when they said, "What are we going to buy?" Snap, was that it?
No, it was Pinterest.
Pinterest.
That was a doozy.
Pinterest.
Yeah.
Where'd that thing go? Where's Pinterest?
Yeah. Wow, look
25.
Where is that thing? Yeah, we haven't looked at that.
Long-term investing. 89 to 25. Ooh. Oh, what a rally, though. Look at how strong. Actually.
Look at the consolidation.
Look at consolidation. Joel both like, whoa, wait a second. Hold the fort here. We're going to sit down. $25. We got some consolidation station going on here. Why? So, okay. Beautiful cup and handle, but why has it not participated?
I don't
in the
know.
Run? That's the concern.
What's going on?
That's the cuppiest handle I've ever seen.
Hey, look at this little channel, tradethechannel.com. Look at this. 20, you buy it 25, you sell it 26.80. You buy it 25 and a quarter, you sell it 26.80.
Yeah,
look at that. Let's keep an eye on this one, folks.
When you're 25.
We need what's gonna get this thing going?
I don't know, but I kind of like the consolidation. The only problem is, again, that, is there a catch-up trade here? I guess it depends on where we're heading. What are the other ones looking like? Twitter's rallied. Yeah, this Pinterest has been left in the dust. So as long as it's above, you're taking a shot. I think you stick around to I go 24.71, the low from the 18th. Takes that out, then I'm out. So you can take a shot. You're risking $1. It's actually not a bad risk-reward setup here. It worked in, what was the one the other day? Asana. Worked in the Asana one, not bad.
Oh, did it? Did Asana move on?
Yeah, I bought it too, actually, after I said it there on the show. Then I was like, I better take my own advice and jumped in a little bit of Asana. I think I got around like 39.5 or $40. And it actually ran up like 45, and now it's back to 41. I guess I should have sold, but I'm still in it.
How has Twitter done since the end of November? Because that was when Dorsey stepped down.
It got crushed. It did. And now they popped it up to like 56, 57 that day. Actually, I still have it here because I did a pre-market prep article about it. I don't know, initial overly positive reaction, and then it just went straight down since then. It's had a nice move, built another base at 38. We'll see, buyers are going to have to step up to 39 now to keep this rally going, but getting back to 40.
All right. What else was on my list here to discuss? I had a few other things. We covered Path. Oh, we didn't cover China at all. Baidu is your new in the news this morning. Baidu was added to this growing list, this never-ending list. It seems like of Chinese stocks that trade on U.S. exchanges that regulators are looking at with closer
Scrutiny.
scrutiny here, maybe a magnifying glass or two, saying, "Hey, these are the companies that maybe we could delist
Man, oh
one
man.
day."
Uh,
Maybe.
I don't want. It's been a nice rally in Baidu and JD and Baba, and I hate what's you're saying with the gift horse in the mouth, Joel. But
Don't look a
kind
gift horse in the mouth.
yeah, it
it's
kind of
definitely Joel
feels
saying.
like if you're sitting around, this has been the big move. I don't know. Maybe they're going to have another move again, but there's a lot of uncertainty in the whole China
Look at the
situation.
Bobster. It's hanging up here. I mean, it's only 110. Someone asked about this a little bit longer term, and I told them just keep an eye on the high close of the move, 117.24. Now, the last two sessions, it did sneak above there, 119.60 and 120.10, but still can't close above 117.24. So that's what I'm looking at for confirmation if Bobster trading down $1.56 today.
Yeah, and so it's taking all China with it here because all of the just Baba, et cetera, are all down this morning on that headline. Speaking of China, tomorrow being the first day of the month, we are going to get some delivery numbers for EVs, Neo, Lee, Tesla as well. May even drop some numbers on us. So just have that on your radar. I'm sure we'll also probably get some retail sales for the month starting tomorrow. So keep an eye on that. It's 8:46. Let's do some end of the quarter ticker time here
Sure.
today, whatever what I say today. Because as we said at the top of the show, it's relatively quiet out there. Yeah, wow, the S&P futures, Joel, are almost flat. This
They've
is
been flat for like the entire after-hours session and this pre-market session.
Yeah.
This is one of the quietest after-hours sessions I've seen in a while.
Yeah. Okay. RJ is asking about Roku, which I have not. I kind of gave up looking at that one because every
Me
time I
too.
looked at it, it was lower. Okay. Well,
Showing life.
Well, yeah. In the last 2 weeks, everything's shown life. But Joel, what do you think of Roku here?
140, 140, 140.
Okay.
Got to get above there.
Yeah. I mean, it's 120 to 140. It's holding in here. But man, it just needs to move above 140. If not, I'd look at move closer to 120. Really can't. I guess two lows in the same area. But man, it's hard. That's until it gets above 140. I got to think this thing's gonna drift lower.
And then how's Generac doing? This is one that tends to fall off my radar when it's not hurricane season.
Yeah, it falls off everybody's radar when it's not hurricane season. This thing was just way overbought when it got to $500. It's coming into. It's still not in a value area. What's the P on this puppy? I bet you it's still like 35 or 40.
I think it might be more than that.
It might be more than that. It's not a cheap stock. It's never been a cheap stock.
Forward PE. Oh, that's interesting. So the trailing PE is 37. The forward PE is only 26, but the price to sales is 5. So it is. I wouldn't call that cheap.
It's still not cheap.
Man,
I don't even.
Yeah,
kind of middle of nowhere.
Yeah, you got the three lows at the 307 area, and then you got the wow, that's just the range right now. So under 307, this thing could get a little dicey on the downside. And man, it seems like you had your run. Everyone tried to sell 330. Oh, I can't get out at 330. I'm gonna try to get out 325. Oh, I can't get out at 325. I'm gonna sell at 320. And now it just offers keep coming down. So danger under 307 on that one.
You guys want to see a blast from the past? I'll get back to the chat in a second here, but I noticed that Clovis is moving today. It's one of the big gainers.
Oh yeah, there was news on it.
The month I joined Benzinga, Clovis was at $116.
Oh my gosh!
It is at $2 right now.
Wait.
CLVS.
Oh, CLVS.
Wow.
Yeah, CLVS.
100 and what's the all-time high? $116.
116. It was the month I joined this company, and now it's at 2.
When stocks fall 99%,
yeah,
they usually don't come back. But anyways, it's going to pop here today. Already off the highs.
Because Clovis did fall from 116 to 11, and then went back to 100. So
it didn't go down to $1 though.
No, it didn't go down to $1.
Dollar stocks are tough to come back. This is ones that at the end of the year you take your tax write-off and you move on. Getting a pop, I don't know. And
15 million shares. What's
I
going on?
I guess it's got news,
Yeah,
so
they
you know
had
how it
some drug
responds
news
to that, but
today.
it's already been leaking. I
Yeah.
don't know. I guess it gets. I don't even know. It gets down to 2 maybe, but this is tough, Joel. This
I just wanted to bring it up because it's a blast from the past.
It's a kind of.
It's not like I tell you, long-term investing in stuff, $2 stocks, dollar stocks. A lot of times, look back 10 years later, and they're like worth nothing. Not saying it's going there, but it could.
But biotech is tough. Biotech is
Really tough.
Really hard.
You need like a dozen of them to get the one that's going to be the winner when you're playing these small little biotech stocks.
That's it. Hey, so Ryan Oz mentioned AMD. I think they're getting a downgrade this morning from Barclays.
Yeah, they are.
Is it Barclays? It yes, it is Barclays. Only to neutral, nothing too crazy. But I haven't actually pulled up a ratings calendar in like a month. But AMD with the downgrade, and I guess we'll start there, and then I'll run through a couple others.
You know what? This thing, I know it's had some nice rallies off 100, but I look at the bottom right chart, and until this thing makes a new monthly high, I mean it still had some work to go in February. It just seems like sellers just keep coming down in this one. I'm leaning more towards the selling 125 was the resistance from yesterday. It doesn't seem like the rallies are like they were when they had that blast from 100 and 160 with the monthly highs coming down.
I'm long it. It gets downgraded. It hasn't really. It went up for a couple days with Nvidia. It's starting to leak here again. Not looking as good as it did. I mean, all the growth is not looking as good as it did. It has a nice little trend going, which is going to break here today, though. So it's not looking as healthy as it did.
Speaking of downgrades, HPQ getting a downgrade today to underweight, and from Morgan Stanley, HPQ. That's kind of the one downgrade that.
Holy, that's a big one, man.
Wow.
They're hitting it that hard on that.
Is
that the only news?
Well, the news was a couple days ago.
They're not. Yeah, but they're knocking it down 5% today because Morgan Stanley says sell. Man, people just can't make decisions for themselves. They take these analyst opinions and then they punish the stocks.
There is a lowering price target from Barclays, but they were already at sell or underweight, whatever.
But if this gets down to $34, I might buy it. This has been, and it is cheap on a valuation perspective. I mean, what's this trading? 11 times earnings, 12 times earnings?
Something like that. It's cheap.
It's low.
It's cheap.
I don't know, 34. You're kind of in the middle of nowhere at 36, but it's not getting there. It's going to take a few days, and I think this is an overshoot already, being down 5% on this. But lots of support at 34.
They smacked it yesterday, pretty good.
They bought something.
Yeah. Oh,
what did they
something.
buy? That's why they were.
I'll tell you, this one for me, the setup is right here, right now, because 36.72 was your low on March 21st. So right here, you're at 36.85. If the bulls, if they want to defend this stock, they're going to come in right now and they're going to defend it. If not, where do you go with this candle right here? Like, give me support in that candle right here, Dennis. Give me support.
No, I'm going to 34 with my support.
I know. You just go straight.
I skipped all that stuff. That's why I think it's an overshoot, but I'm not buying the dip because it's in the middle of nowhere. So technicals work after the news comes too, and the news is the downgrade. I think it's a lot of support 34, but it's I'd be shocked if it gets there anytime soon. I think there's going to be some chop to get there, but maybe eventually gives you a shot down there.
All right, that is the only downgrade or upgrade that, for that matter.
Wow, we're talking analyst ratings. Oh my god!
It must be a slow morning. I didn't even know analysts did ratings anymore.
They're still analysts.
I said I brought up a calendar.
Oh my lord!
I haven't been to the ratings calendar.
I don't even look at them anymore.
I haven't been there in probably a month.
Yeah.
Anyway,
because they don't know what the hell to do.
No, I don't. That's exactly it, Joel. With all the macro headlines, analysts like, well, I'm holding that note. I like this company, but I'm going to hold it until I get a better environment to release it. And you're starting to see, with the VIX coming in under 20 now, the analysts that have been sitting on these notes are starting to release them. So you're starting to see some opinions all of a sudden again. If the Ukraine headlines start pumping out again, the analysts will go quiet. The quiet period for analysts.
I do want to mention, by the way, that we are going to have, I'm not sure how we swung this, but we're going to have the CEO of Highcroft Mining on Benzinga Live today at 11:45. So if you want to see an interesting interview, you should tune into that. It's gonna be interesting.
You doing that one?
Yes, Joel. It's going to be an interesting one, I'll tell you that. A few people are asking about Vale, V-A-L-E, the Brazilian mining company. Not to be confused with Vale, which I always confuse.
It's sitting there in consolidation station. The only thing is some of the commodities are weaker here, and you somewhat worry about, if there's going to be. But this is already pricing in too, because its markets are actually open right now. I don't mind the chart. I just don't like the weakness in the commodities today.
To see if you can. It's trying to get over the top. 3-4 tops right here. So let's hold the close. Hold the 2003. You've had 1, 2. You had to move up 1, 2, 3, 4, 5, 6, 7 days of consolidation, showing a little bit of life. That's if you want a short-term target, you have 2047 and 2096, but kind of doesn't feel like it's going to get there today. But we'll see. Kind of breaking out of the top of a small consolidation period.
Also, if you all missed it, check out the first part of our 3-part series on our road trip down to the Helion headquarters. We premiered the first video yesterday. It's currently on the top of our YouTube channel. The second video will premiere at 1:45 today, right after Benzinga Live.
Fun.
We did a field trip. We never go on
trip.
field trips. Yeah, Benzinga field trip down to Austin, Texas. I didn't get to go, unfortunately, but I got to live vicariously through the video. Very good stuff. Great job, Mitch and team, on that.
Hey, Mitch, can you? And I see you lurking in the background there. Can you hop on for 1 second?
Oh boy,
why not?
It's right
do it.
there.
What? Like I saw you standing next to that truck, right?
Mm-hmm.
It looks like a lot of other trucks I see on the road.
Yeah,
So
I'll tell you the difference. I'm not going to give too much because, that's why you got to watch today's show, right? Today is the real reason I think Hyliion has a competitive advantage. So if you want to find out, you got to watch the video today.
It's not. Don't judge a book by its cover. Don't judge a truck by its chassis.
That's our job. As
This
traders,
is the key
it's their
here.
job to judge.
I'm cool
judge
with
the book
judging.
by its cover.
Cool.
That's all the
cool
logos look like is the cover.
As simple as this. How much does the Tesla semi-truck cost versus the cost of this that gets you to get over the emissions, and you can go into those ports that you can't have a diesel truck in. You can go ahead and tell your investors, yes, we're moving towards carbon neutral, versus what a lot of companies are going to go through is the struggle to go to carbon neutral because the cost to replace the fleets is just too high.
Okay. Boy, I set you up on only one recommendation. If you talk to the, what was it, the CEO?
Mm-hmm.
That color, green.
What's wrong with the green?
My kids love green cars.
Green's a great color, Joel.
Blue. You need a blue car. Yeah, it was kind of
My boy Blue.
It was. All right, Mitch. Great job on that.
Check it
that's
out,
good
guys.
insight.
Great job on those videos. They spent weeks on that stuff. Mitch and others got to test drive a truck, which I've never got.
Really?
Wow. I'm sorry if I just spoiled it. It's in the video.
Where is the Helion factory? Where is it, Spencer?
Texas.
What?
Right?
Where is it?
Yeah, they're outside Austin.
I hear Austin's a great town. I hear it's almost as good as Ann Arbor.
I hear it's weird. Anyway, it's 8:58 here. Unfortunately, Peter Talkman did have to cancel. Texted me about an hour ago. So no Peter today, but we are about at the end of today's show.
Sure.
Guys, any final thoughts for us as we head into the final day of the first quarter of 2022?
It's a really tough market, but you think you're going to the final quarter. There could be some push with some window dressing. You got commodities trading down, which is a good setup for stocks to go green. I'm very surprised that the S&P is flat with oil down this much. So I wouldn't be surprised if you start to see a lift in some of the stocks just if oil stays down like this. If oil reverses. But we've seen this inverse correlation holding for a while now and not holding today for some reason. Maybe there's something else that we're missing. But I'd be more biased to buy stocks, at least for today.
Yeah, it's kind of hard because I usually get a pretty good feel from the overnight. And I felt good about the close yesterday, and I tried to buy overnight. I was a little bit too cheap. So I don't know. I mean, you got the close, you got a congestion here. You got the close at 45.96. You got the nice round number of 4,600. So we go 40. You know, you spend that first 15 minutes and you're holding 4,600. Then I think you know you can maybe nibble. But the ranges have been coming in. It's been choppy. You
Yeah.
know, you got a jobs number tomorrow. I don't know. Look, yesterday with a half hour to go, we were going down. We were
Yeah.
going to get back into Monday's range, and man, the rally was over, and then boom, right
Yeah.
back up at 4,600. So tough day here. Not getting. You know, I can't give you like a great that high at 14 and a quarter. Not means nothing to me. The only thing on the upside is the close from Tuesday at 25 and a half. So sorry, folks. That's all I got for you
I
today.
do want to mention the number one gainer on my movers tool this morning is Longeveron. Shout out to the Benzinga Pro news desk who had the exclusive. If you had Benzinga Pro, you got the news first. Get Benzinga Pro by clicking on the link that's in the description, in the chat, or on the screen. It'll get you 25%
What's
off.
the news?
They announced some phase 1 news for their Alzheimer's drug.
Oh, wow.
Yeah. So it was published in the Alzheimer's and Dementia Medical Journal.
Cool. Big move.
And so there was some news in that. We had the exclusive at 7:30. Stock ripped on that. You had it in Benzinga Pro. You had it first if you had Benzinga Pro. That's a wrap for us. Heading on over to live trading with Benzinga, Mitch, Zunaid, Ryan. Everyone have a great rest of your day. Smash the like button. And don't forget, seriously, about our 2 upcoming events, our upcoming Cannabis Capital Conference in April and the FinTwit conference that we are co-sponsoring in Vegas in May. Go to benzingaevents.com to learn more. But also there are discount codes in the description of this video. Use those codes. They won't last forever. I promise. All right. That's a wrap for us. Head on over to live trading starting right now. Good luck at the open, everyone.